FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video, we're going to take a look at the anatomy of an M or W formation or pattern when it comes to our strategy that we trade. So let's take a look at the anatomy of an M or W. Let's get this started, guys. Alright guys, so if you're new to the channel, thank you so much for stopping by. Please consider subscribing. We really appreciate your support. And if you want to become a free member, just go to fxntrading.com and sign up for free. So guys, let's talk about the M or W. So the M or W essentially is, my God, it's a frequently identified pattern on any chart. You can look at stocks, you can look at Forex, gold. I mean, any chart you'll see M's and W's, right? Now, when we talk about M's and W's, we're going to specifically be talking about M's and W patterns when it comes to our specific strategy. There are probably hundreds, if not thousands, of other strategies out there that use M's or W's, and by all means, those are absolutely fine. As long as you backtest them and they work, bravo, awesome. But in this video, we're going to be specifically talking about M's and W's when it comes to trading with market makers. All right. Now, a quick mention, I don't know if you guys knew this or not, but a railroad track is actually really an M or W. If you did not know, now you know. So when it comes to the railroad track, actually, it is an M or W, and it's actually just happens very quickly, but it has the same effect as an M or a W. All right, and we'll get into some examples and things of that nature as we get into this video here. But I want to go ahead and let's take a look at what makes up the M and W. All right, let's take a look at that. All right, so here we have two M's, right? One of them, as you can see, is even. The other one is not. Why is that? What's the difference, right? So let's go over that. So what makes up an M? Okay, what makes up an M? All right, so the first leg of the M here are basically traders that are induced to go, in this case, long. Okay, so they're induced to go long, and that's why you have essentially that first initial move. When you have a type 1 setup, when you have that first initial push outside of the Asian box, right, it's basically this first leg of the M that is creating. Okay, and that just, all it does is it just induces traders to go long on a trade. Now, what happens once they go, let's say, 25 to 50 pips above the initial high of Asia? All they're doing, essentially, the whole M or W, at the end of the day, when you really just simplify it, all they're doing, guys, is they are inducing traders to take positions. Okay, because without traders taking positions, they cannot move in the direction that they actually want to move. All right, so if they want to go, in this case, if their overall move, their overall thinking is to go short, they need traders to go long so they can have the other half of the trades that they are taking on from traders. All right, so the first leg here essentially is used to induce traders to go long. Once they have a decent amount of traders going long, you're going to have some traders that ultimately go short. Okay, and so what happens here is they go ahead and they go back up to retest this high. Now, this does two things. One, it gets rid of the traders that essentially went short on this trade here, going short. So by going back up to the high of the first leg, it cuts out these people that went short. But it also induces more traders that were still thinking about going long to go long. Okay, if you read in any book, any Forex book out there, what do they always talk about? They always talk about 1, 2, 3. if we go back up to our example, and if we take that out, and you're a trader, and you've read your, normal books out there that are out there on Forex, what does it tell you to do if you're in, let's say, an uptrend? It tells you to buy the retracements, right? They tell you to buy the retracements. So what's going to happen here? Buyers are going to come into the market, right? And they're going to go long. And they're expecting a move like this. That's what they're expecting, because that's what they've read in every book. Okay? What actually ends up happening is they go up here, and there's a couple different variations on this. So I'm just going to go through all of them here for you, but here's the first one. First variation of it is that they go up to the high of the first leg. They basically want to induce as many traders as possible. All right. And if they're going back up to the second leg, to the first high of the first leg, that means they don't have enough traders, okay, to go short. All right. So they'll go all the way up to the first leg here to induce traders. And sometimes you will see the spike, okay, spike go higher, but the actual candle closes right at the first leg. But you'll see a spike all the way up, right? So you'll end up seeing things, you'll end up seeing something like this, right? The second leg candle you'll see end up looking like this, okay? And why is that? Well, it's because they wanted to basically go and induce as many traders as possible by going past this first leg, right? By doing this, they induce all traders to go long, okay? Because they believe they're getting that in the long run, all right? But they're not. They come all the way back down, and then on the next candle, they immediately drop. And once they do that, once they have enough traders trapped, it's over. They're not coming back. They're not coming back for it, guys. So that's one variation. The second variation is this one. Okay? And the same concept is exactly the same. The only difference is that when they go back for this second leg, they don't go all the way back up to the second leg. Okay? The reason that they don't do this is because they already have enough traders trapped. So they don't need to go here. They don't need to fake out long. They have enough people already that they need. Okay? What they don't want to do is that they don't want to release the traders that are already trapped along into break-even trades, because then they'll get out of the trades, and guess what? They won't have the availability that they need to do the short. Okay? So the only reason that you'll see patterns or M patterns like this, where it looks like it's just short of the first leg, is because they had, on the first initial push, they ended up getting all of the traders that they needed. Okay? They didn't want to go all the way back up, because if they do, they release those traders that are trapped with break-even trades. Have you ever been in a trade and you were wrong in the direction of the trade? And you were sitting there for, I don't know, an hour, 2 hours. And you're like, man, if this trade just gets back to break even, I'm out of the trade. I'm done. I'm out. I'll be happy if I can just break even with the trade. Have you ever gone through that before? You probably have. This is exactly why. So those are the two variations of the M pattern that you'll see. Now, a couple things to note is from the first leg to the second leg. Okay, first leg to second leg. Ideally, you'd want to have anywhere between, I would say, 5 to 8 candles. either 2 to 8 candles, or really this, when it comes down to first leg to second leg, we're talking anywhere from typically 30 to 90 minutes. And the reason I say 30 minutes specifically is because that is when you end up getting the railroad tracks. So you end up getting the railroad tracks when it's only 30 minutes, because all it is just 15 minutes up, 15 minutes right back down, right? That is the same thing as an M. It does the same purpose as an M, right? You get a nice big railroad track, right? It's the same concept, right? There's a big long candle inducing traders to go long. As soon as they have the traders trapped or going long enough, they come right back the next 15 minutes straight back down. And typically when you see this, you see that they don't come back. They just go straight down. They don't come back. So essentially this is the same thing that happens with a W as well. Same thing as an M, same thing as a W. So same exact concept. All right. So I'm going to pull up some examples so you can see what I'm talking about. Here's the first example. We have the Asian box here, and then we have what? Price comes straight down, comes back up, retest, and then goes back up, right? Here's a W formation here. Now, what happened in this W formation, right? First leg came down, they went back up, they came back down to retest. This is what happens, okay, when they don't have an example like this. So this type of an example where the second leg goes over the first, the only reason they do this is because they don't have enough traders convinced to go short. Okay, so they have to go back down and retest. Now, when they come back down and retest, they will go back down as far as they need to convince you to go short. But as soon as they have what they need, they're out and they're not coming back. So they come down, go back up, come back down to retest, and then they're done. So here's another example. Out of the Asian box, what happens? They go down to the low of Asia, they come back up, and then they go right back down to retest. As soon as they have enough, they're out of there, and they're not going back. So this one just happened to be, what, a type 2 setup. So on this one here, you can see that they tried so many times to induce traders to go short, right? They didn't get what they needed. So guess what? They had to convince people to go short. So what happens here? Right out of the Asian box, they go down. You see all of the wicks. You see all these wicks here? That's them on the first leg trying to induce traders. If you go back on a line chart, you can see that this right here is actually a W. The only problem is, you see it right here. The only problem is that they didn't get enough traders to go short. So what do they have to do? They have to go back and convince you that it's going short. How do they do that? Well, won't you just stick a big fat candle going down to convince you to go short? And as soon as they have you convinced, they have one big fat candle, and then the second candle, remember this candle starts down here and it goes down first before it actually comes back up. So a good 15 pips straight down first to convince you to go short. But as soon as they have enough, they're out of there. Look, it's 4:45, 5 o'clock. They're gone. They're not coming back. So remember, what I tell you guys is The pattern and the timing are the most important things. Everything else is just extra tools. So here's the pattern, there's the timing. Keep it simple, guys. Don't overcomplicate it. Here's another one here. Asian box. They go down for the first leg. Okay, they try to get as many people to go short. They didn't get as many people convinced. Fine. They'll throw a nice big fat bar straight down. Yeah, it's about 14 and a half pips. That entire bar. So they come down first leg, go back up, don't have enough. Fine, they'll go back down again, and then they'll get them. If you look on a line chart, what does it look like? That's it. But that's all an M and W is, guys. Is first leg is traders are induced to taking trades, either long or short. Okay? And then what makes up the middle of the M or W are basically them collecting contracts and then going back down to collect more traders and induce them to go in that same direction. That's all it is. As soon as they have enough, they go back up and they're done. It's really just that simple, guys. All right? So I hope this video has showed you how simple you can keep it and not complicate anything. All right, guys. Thank you so much for watching the video, guys. Until next time, enjoy the weekend. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntrading.com. Once again, guys, thank you so much. I'm truly blessed.